We will go through all the transactions when you use the two different inventory systems. So first of all, if we use the perpetual system, remember we use a cost of sales column, and every time when something happens to inventory, we will record it in our inventory account. In the periodic system, we don't have cost of sales, and we will not record anything in the inventory account. So if it's in the cash receipts journal, in the perpetual system, there will be a column for cost of sales. There's no column for cost of sales. You will show that the bank increases, so your asset will increase with 200, and you will credit sales. Sales is an income, will increase my profit with 200. In the periodic system, you will do exactly the same entry. Then, for the cost of sales, you will indicate that the inventory decreased, so my asset decreased with 90. Cost of sales is the expense that increases on the debit side. Expenses decrease my profit, so my equity will decrease. When there's cash purchases of goods, it means that we will record that in the cash payments journal. In the perpetual system, we have an inventory column. In the periodic system, we will have a purchases column. So this one should be purchases. Okay. Then the bank pays out money, so the bank is credited. So my asset decreases with 4,000. We have more inventory, so my asset increases with 4,000. In the periodic system, we don't record it in the inventory account in purchases, and purchases is an expense. So it means that the bank will decrease with the 4,000, and the expense will decrease my profit with 4,000 rand. When goods are returned by debtors and sold to debtors, so we will first do the sales one. In the debtors journal, I have a cost of sales column, periodic no cost of sales column. Then when we sell goods, we sell it to debtors, so I will show that my asset increases with 8,000, so the asset increase with 8. Sales is an income. Income increases my profit, so my owner's equity will increase with 8,000. That is the same in the periodic system. Then we have to calculate the cost of sales for this entry, and we will debit cost of sales. That is the expense, and I will indicate that my profits will go down with the 5,000 rand expense. And the cost of sales is debited, inventory is credited when we sell goods because we reduce our inventory, so my assets decrease with 5,000. In the periodic system, you will not have the entry for the cost of sales and inventory amount. If we look at the second one, the debtors allowances, we will have a debtors allowances account and a cost of sales account. No cost of sales. So it means the debtors return goods. So I have to show that the debtors must decrease with 800. So here I will show that my assets decrease with 800. I debit my debtors allowances account. Debtors allowances decreases sales. So it's like expense. It will decrease my profits with the 800. The goods were returned, so it means now we're not selling it anymore, so I will credit my cost of sales. If I decrease the expense, my profits go up, so my equity will increase. The inventory was returned, so now we have more inventory again, and I will increase my assets with 500 rand. Goods purchased on credit. Okay, so in the perpetual system, you will have a creditors control and the inventory column in your creditors journal. In the periodic system, it will be purchases. Okay, so we buy goods, so my creditors increase with 7,000. Creditors is a liability. I owe more money, so my liabilities increase with the 7,000. And then the trading stock that we purchase increased with 7,000, so there's my double entry, and I will indicate that my assets increase with 7,000. Now here is a big difference. Because we don't have an inventory account, I will show that my liabilities increase with the 7,000, but purchases is the expense. Expenses decrease profits, so it means it will decrease my owner's equity. Okay, if the goods are returned, we will record it in the creditors allowances journal. So it means the creditors control, we send goods back, so we owe less money to the creditors. So we will credit the creditors control, debit the creditors control to indicate that we owe less money, and I will show that my liabilities decrease with the 1,400. If it's in the periodic system, we will show that the creditors decrease with the 1,400, but what happens now? Creditors allowances is a nominal account. That will decrease purchases, that's the expense, that's also a nominal account. So if I decrease the expense, it means my profits go up, so I will show that the goods returned will increase my profits with 1,400. In the periodic system, I will show that we return goods, so my assets decreased with 1,400. Donations, drawings, any of these items that can happen, so it can be donations, they can give goods for marketing, they can take goods to use as stationery. So in the perpetual system, you will show every time that the inventory account is credited. In the periodic system, you will show that you want to decrease the expense for purchases. So remember, purchases is an expense. So when we buy goods, we write it on the debit side of the purchases, indicating what is my expense that will go to the income statement. Now, if anything happens and we don't have all those things, because we're using it for some other purpose, we have to decrease the expense. So if I do it in the accounting equation, drawings will always decrease equity. In the periodic system, we will debit drawings and we will credit purchases. Purchases decrease, so the expense decrease, and therefore the 100 Rand will increase my profits. In the perpetual system, we will show that the inventory, that's an asset, decreased, and the drawings will decrease your equity. So there's a very big difference when you do the accounting equation in the periodic system, because in the perpetual system you decrease your inventory, so it will have an effect on assets. In the periodic system, you record it on the credit side of purchases, so you increase your profits. When you do accounting, you must always know what is the rules according to IFRS. To determine the cost price of your inventory, you have to take the purchase price that you paid for it, and if you received trade discount or cash discount, you have to subtract it, and the reduced amount is the purchase price. Then any expenses that you pay from the time that you purchase it until it's delivered to your premises must form part of the cost price of this inventory. So it can be, if I imported, shipping fees, import duties at the harbour, delivery costs to my premises. All those expenses to get it to my premises will form part of my inventory. And if I receive the goods and they're not in the condition that I can sell it, like I buy, for instance, a 1,000-liter very good big container full of hand lotion. Nobody is going to buy that, so we have to put it in smaller containers. Then that expense for the little bottles and the labor to put it in the smaller containers to be able to sell it will also form part of the cost of the inventory. With that, it's very important to remember all the assets, liabilities, income, expenses excludes VAT. You can never put VAT into any of your expenses because you get the VAT back. You can't show the VAT as part of your income because you have to pay the VAT to SARS. So when you buy things, you have to determine the expense or the asset, you have to take the amount and you must say, the amount that will go in my purchases account or in my trading stock account or whatever, I will multiply with 100 divided by 115. And if I want to calculate the VAT, I will multiply the amount by 15 over 115. There's only 3 accounts that include VAT, and that is bank, because when I receive money, I receive my own money and I receive the money from SARS when I sell goods. Debtors control. When I sell the goods, the debtors owe me the money for my sales and they owe me the money belonging to SARS. And creditors control. So that is the only assets and liabilities that can have VAT included. So it means these accounts will be 115% accounts because it includes the VAT. All other expenses and assets, liabilities, income, you have to take out the VAT so that it's not included. I'm going to do another video on the inventory valuation methods so that the videos are not too long.